Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 12th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies, but at the end of the day, we are here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. All right, well, let's get it on with markets. Well, truthfully speaking, we don't have a whole lot of economic data today. We did get JOLTS job openings, came in at 7.34 million openings, expected to be just slightly shy of 7 million openings. So better than expected means people are looking for employees because they are seeing their businesses do well and need to add. So that is a good thing. That means the economy is looking pretty good. We've been talking about where we've been seeing some iffy economic data on how robust or how much traction this economy is getting. So that's a good one to see, especially with some of the other Fed manufacturing numbers that we've been seeing, like Philly Fed, Chicago Fed, stuff like that. All right, so that's a good number to see. We've got rest of the week some pretty good economic data, CPI and PPI coming out, so keep your eyes out for that. That's going to be tomorrow, Thursday, and Friday. We're going to have some good economic data. Really, all we got right now is a couple of Fed governors speaking, and that's what our market has been going on this week. So Powell's speaking later on this afternoon. Actually, yes, later on this afternoon. All right, let's move over to the markets. We've got crude oil moving higher. Again, still right there at those mid to low 50s, which is where I would expect this market to stay, at least until we see some kind of catalyst to really kick us in the pants to get us moving. I think that's it across the board, too, to be quite honest. Very tough environment to trade in and around because we've got earnings. Those are the ones with the high implied volatility. The ones that don't have the implied volatility, I don't expect a big move anytime soon. So it's very difficult to add premium buying strategies when I don't expect the market to move. And because there's no volatility in the ones that don't have earnings, I can't sell premium. So it's very difficult. I'm really stuck between a rock and a hard place and just really relying on some of these earnings trades to start implementing short premium selling strategies. All right, but crude oil kind of right where we would expect them. I don't see any big moves anytime soon. Gold is moving higher up into that 13 handle. It's actually getting quite comfortable in and around this 13 handle. So this value area high where I thought we were going to start feeling like we were getting a little overextended to the upside because of 70% of the volume being below where we are. Basically, you can see where we're building out this node up here in this 13 handle. That's price being accepted, despite the fact that I think that it's a little frothy or a little overpriced. Price is being accepted here at these levels as well. So we could see the point of control where the most time and volume has been spent move higher to where we are in and around this 1325 area. So my target is about 100 points below this. I don't have any positions on those. Oh, I actually am short GDX. So bonds coming off a little bit today, about a half a point. At the end of the day, we're talking about the bonds being priced in where they should be. Remember, we talked about when they were down here, it was just way overdone. The Fed was not going to ease rates that much. So when we were up here, that's where the interest rate ease was starting to come in. I don't think they're going to ease. I think they're just going to hold off. This is where tightening was just way overdone, raising interest rates. All right, so on to the VIX. VIX is, kind of holding on to those 15s. At least we're still in the teens if we have something to look at. But Dow Jones is moving higher. VIX would expect to really come off, but we're not really seeing that rate lately. I think it's going to get comfortable in and around these lower to mid-teens in the VIX. So we've got the Dow Jones moving higher quite nicely today. We've got the NASDAQ peeling higher. This was looking like a continuation pattern to me yesterday to the downside. Today we're getting a bit of a bump here. one of the worries I have is that this market is really going to try and push away from this point of control into Friday. And the reason why is to kind of get away from where the most time and volume has been spent. People have placed their, positions. These guys are going to try and push it to an extreme maybe to get out some of these weak hands. That's the only thing I can really see here is the reason why we're starting to push higher. I think that late in the day is going to be really telling as to whether my market assumption is still intact. Right here around the point of control is where we're going to kind of settle down for about a week, better part of this week anyway. If we break and settle above this Fibonacci, 38 Fibonacci extension, that assumption could be out the window. So I'm going to have to keep an eye on this really closely. It seems like they really want to start to push this, it feels like today. E-mini S&Ps, similar situation where they're pushing up against the 38 Fibonacci extension, but coming just shy of that. So it seems to be following with my mantra, but a settlement above this 38 Fibonacci, I might start pulling some ripcords on a few things on my directional assumption, which is IWM, where I added some short calls for a portfolio adjustment. Well, I've taken off those other aspects of my portfolio and still have that IWM in there, which is being tested today. But right now, this actually, if we finished out right here, could start looking a little bit toppy for the day and maybe see some retracement, which is what I personally would like to see for my position. All right, now I haven't added anything, but a couple of trades that I'm looking at for earnings. Activision, not so sure. I'm a little iffy on this one. I probably played this one to the downside. They've been missing on earnings. Now, one thing to note, though, Activision could be coming back around here because of Fortnite has been hurting Activision, EA Sports, and some of those other ones. So Fortnite seeing a little bit of chink in their armor, if you will, because EA Sports with this Apex Legends has basically started beating a lot of Fortnite's accolades, for lack of a better word that I can't think of, which is a very simple word to think of if I can come up with it, but basically breaking a lot of their records. See, that was a real tough one. Breaking a lot of Fortnite's records. So on Twitch and their streaming, they've been knocking it out of the park. If we look at that will help out Activision to the upside. I mean, we could take a look at EA Sports. I don't think I have a chart of EA Sports here, but you can see this is when I got stuck in that earnings trade. They didn't come out with very good earnings, and then I started tweeting out about Apex Legends. I probably should have known better. That's a massive move. Basically, extreme test to the downside breaking probabilities to the extreme test to the upside breaking probabilities. Not unlike what they are doing with extremely breaking some of the records that we've seen set by Fortnite. All right, so the other trade that I'm going to be looking at is TWLO. I'm probably going to play TWLO to the upside. They've seemed to do very well in their last earnings. High implied volatility, as you can see. They are at a top area, but with this high implied volatility, I'm able to get way down here and look at like the 100 puts that I'm going to be looking into trying to short. So that's a nice big area to a couple of supports to help me out going forward as well. So TWLO is probably going to be the one I'm playing today. Don't know necessarily about Activision. TWLO, just so you guys know, probably a little bit on the yellow side for markets. They're a little bit wider than what my rules are, so that would be a yellow light for this. If you are a newer trader, you may want to stay away from it. Plus, it could be very volatile as well. All right, that's it. Thursday's webinar is going to be a good one. Go to protraderstrategies.com and sign up for that. Again, sorry about yesterday with the missing the daily market commentary. Was having all kinds of computer problems. If you see the short put spread webinar, you can see my computer screen was going out and having some funky stuff happening. I think I've cleared all of that up for you. So check it out, protraderstrategies.com. And if you can't take that, take it easy.